I wish my voice sounded as smooth as butter, like those guys from the land down under. But it doesn't, because I'm freaking American. What's up, you guys? This is Justin here, and in this video, I'm going to explain to you why, after making over $2.4 million, I am not a millionaire. So as you can see, I made a lot of money over the last 10 years running my businesses. I have a coaching business that I've derived a lot of income from. I have a lead generation / marketing services businesses that have generated a lot of revenue and a lot of profit from as well. And I've also had some real estate profits mixed into there from investments that I have made. But the main goal in this video is to basically break down all of the huge mistakes I basically made over the last 10 years that put me in a position where I was very liquid, high, massive income for the last 10 plus years in a row. I still managed to not become a millionaire in cash, unfortunately. The second goal is by me illustrating my mistakes. Hopefully, no matter what age you are in, because we're all learning at all ages, hopefully you can take at least one or two or a handful of these things and don't repeat, ideally, the same mistakes that I made. And that would be awesome for you. So let's dive right into it. The first major mistake I made that allowed me to not become a cash millionaire at my current age of 30 is I did not invest in real estate. I did not invest in stocks. In fact, I didn't really invest in anything. And if I had automatically paid myself and put money into stocks and gotten 6 to 12% annual returns on compounding, and also had lived a little bit less below my means and had invested in real estate and got the massive tax advantages from owning a house, like the standard deduction, I think it's $12,500 for a single person this particular year in 2022. Make sure you fact check me on that, but I think that's the case. That's a huge deduction that I could have gotten, could have saved me a lot of money on taxes. I also didn't get any principal payoff. So let's cycle back through some of the things I just said. I did not invest in stocks. I did not invest in real estate. I didn't automatically take a portion of my gross income to allocate to different asset classes like stocks, like perhaps mutual funds, like real estate, like nowadays cryptos, and exactly something that could potentially go up in value, like Bitcoin and Ethereum actually did. I didn't set a budget. All of these things. When you don't do those things, you end up living probably most of the time paycheck to paycheck. The more money you make, the more you generally increase your lifestyle. And for a long time, I simply did that. I have videos on my channel where I lived in penthouses where the base rent was anywhere from $3,250 all the way up to $4,000 or more, not including utilities, which were considerable. I also live by the mindset is like YOLO, you only live once. Okay, if your dream job is to open up a taco stand called Tits and Tacos, where you have large-breasted women serving wonderfully, graciously beautiful meat in between a taco shell, that's what you should probably be doing, not watching this video. So why are you here? So here's what you should basically do, in my opinion. What I would have done differently. I would have taken at least 10%, but probably 20% of my income, because I probably could have put up to 30% of my income into investments, and my net worth would be a lot higher today. But what you want to do is automatically pay yourself. In fact, I listened to / read a book called The Automatic Millionaire recently. And all you need to know, the main core concept in that book was a lot of millionaires automatically just take 10 to 20% of their gross income. They put it into a 401k or an IRA, and then they let that money multiply itself over time. And it's that simple. That's one of the biggest principles in The Richest Man in Babylon, is simply doing this. The second major tip or key is home ownership. When you're paying off something that eventually is going to have a lot of value someday, or is increasing in value over time, like most houses in most real estate markets, that's the second major thing I did not do since I started making all this money back, since dating all the way back to 2011 that I could have done. I didn't start investing until 2017, which that was 6 years of time that I could have been paying off a mortgage and getting substantial savings in taxes, because you can write off the mortgage interest and the property taxes, and you get principal payoff, and also you get potentially appreciation on the home, and you can also get and also the principal payoff as well. One of the biggest mistakes I had made, most of my adult life as a successful businessman, is my goal was always to minimize my tax liability instead of increasing my net worth. So ages 19 through 25, my entire mindset was to spend as much of my disposable income on legitimate tax write-offs as possible. So I bought courses and softwares and did all these services that were meant to stimulate my business, that were meant to be a legitimate tax write-off or operational expense. I can tell you straight up, because my goal was so hell-bent and focused on just literally lowering my taxable income, which like legitimately, I ended up buying a lot of services and products and things that had no impact positively on my profits in the future, which is really stupid. And obviously the goal is like when you reinvest in advertising, sometimes you break even, sometimes you lose money, sometimes you make money. Other times when you invest in educational stuff like courses or softwares or other services or contractors, the thing about me is I've had like a million ideas, and not literally, I've had like dozens of ideas that I've spent tens of thousands and hundreds of thousands of dollars on that are legitimate tax write-offs, where I hired teams of people to build these things. And some of them I did not bring to market and sell. I just took as losses, and I have giant losses. Other examples of ways that you can write off stuff is like when you use your space, if you're renting an apartment, you can use that as the rent as a large tax write-off and save a lot of money like that. But the basic, if you look at the 2.4 million that I grossed, that was gross receipts, okay? It was revenue. Okay, the actual profit was probably about 2 million. About $400,000 of that was probably necessary to create the entire package of 2.4 million. So I'm just assuming and guessing and estimating, but I think I am very accurate on that guess. About 2.4 million gross, about 2 million could have been taxable income. Now I got that $2 million in taxable income down drastically, because out of that 2 million in profit, like you as a business owner, you have discretionary things that you can spend the money on that you can write off from the business. And that's exactly what I did. So I got that $2 million in profit knocked down drastically. So what I was actually taxed on was a much smaller number. But what I could have done, instead of looking for ways to spend that money to lower my taxes, big horrible thing that I did, I should have looked for ways to live off of like 50% of that income or 75% of that income. I should have put 25% into like real estate, stocks, maybe precious metals, maybe cryptocurrencies, other assets. I should have bought other businesses that could have generated passive income. I didn't do any of those things until I was like 27 or 28. I'm now 30. So the good news is I invest in precious metals, in cryptocurrencies, in stocks, in real estate now. And that's one of the reasons why this channel is cool, because I'm one of those guys who's made a lot of money, spent a lot of money, and totally had the wrong mindset about how to become a millionaire, at least from a point of view of not investing any of your earnings, because I spent money frivolously with a YOLO mindset, and I actually don't regret it, but I definitely would have not invested in certain things, okay? Certain really expensive events that I went to that were really expensive, giant dinners that I paid for where my clients were there, where I bought my clients dinner, stuff like that I enjoy. But there's just a lot of things I could have done different to make my taxable income way higher, and just paid a lot more in taxes. But I could have also had, as a self-employed person, I could have created a 401k for myself, put a ton of money in there tax-free. I could have let it grow. I could have let it multiply. I could have sprinkled it into real estate and a lot of other things that would have multiplied itself in value. And that is why I am not a millionaire after making over $2.4 million gross and pretty much $2 million-ish in net profit at this particular age over the last 9 to 11, 10-ish years. I hope you got a ton of value out of this video, and I hope that you'll learn from my mistakes and do the opposite of what I did so that your net worth grows at a light speed. All right, I'll see you on the next video. Bye for now.